Welcome back then. Let's focus on the company Rajratan Wires. Remember, the company is into bead wires. They made those bead wires that are used in tires, and it's a very small component when you make a tire. Close to around 3 to 4% of the tire cost is the bead wire. And the company has close to around 50% market share as per what they state on their presentation. Well, we have Mr. Chordia, who joins us to detail the past year and the way ahead. Hi, Mr. Chordia. Thanks so much for joining in, sir. I understand as a percentage of your sales volumes, you have a higher amount of exposure to the replacement market. I think it's around 70% or thereabouts. And clearly, a lot of parts of India have been shut. So if you could tell us, what is the impact? What is the impact you've seen in April and May in comparison to the normal monthly run rate? And also, what were the volumes you did in the past year? And what's the outlook for the company on the whole in terms of volumes? Please go ahead.
Yeah. So Nigel, in last year we did around 42,000 tons in India, and we did 29,000 tons in Thailand. That was the volume, which was achieved in almost 3 quarters of last year. This year our business plan was to do 60,000 tons in India and more than 36,000 tons in Thailand. I don't see any impact of COVID lockdowns in Thailand. So we are going to achieve 36,000 tons target of bead wire sales in Thailand. In India, April was normal as per the plan, but May and June, I definitely see some reduction of about 20% in the offtake. So it is because of the continuous lockdown in every part of the country. So the volumes overall, I see, the 60,000 tons target for this year may be up to 95%. Yes.
Okay, all right. So you're broadly looking at around, 55,000 odd mark if I just do a rough calculation,
Yes,
or maybe around the 56, 57,000 as well. I'm just going through your margin picture, and you used to do around 11, 12% approximately. In the last year, you did around 17%. And if I just calculate that number, you said you combined sold close to 71,000 tons, and you did an EBITDA of around 92 crores. Then your derived EBITDA per ton comes in at closer to around 12,900 or around 13,000 rupees per ton. Now that's a sharp improvement, and I'm tracking the steel companies very, very closely, and they have been increasing prices. Could you tell us what should be the margin band that you're looking at for this year? That's for FY22. And also, I'm not sure whether you'll track it on a EBITDA per ton basis, but can you maintain this 12,900 to around 13,000 rupees per ton?
Yeah, Nigel, yes, I agree with you. The steel prices have been very volatile in last 1 year, and they continue to be like that. That is the forecast we get from the global steel market. But fortunately, we have been able to pass on the price increases. And our margins are not only because of our passing on the price to customer. It is also because of our leveraging the additional capacity in India. So you remember we have increased our capacity last year from 36,000 tons to 72,000, which has given us good leverage, and we are able to generate better margins because of the higher capacity and lower cost of production. So I'm optimistic about achieving the same margins this year.
Okay. So you're optimistic about achieving the same kind of margins this year. But if you could just give us a sense in terms of what you are envisaging on the revenue front, while you probably envisage maintaining margins, you've done around 14% growth totally in terms of FY21, 548 odd crores. Can you replicate the same, and what would the breakup be geographically as well as segment-wise?
Yeah, so you look at the performance of last, second half of last year. So if without growth also, we will be, if we continue performing like last year, second half of last year, we'll achieve a growth of 30-35% this year. And we are planning for utilizing the capacity, the increased capacity in India also. We are also, in the process of increasing capacity in Thailand. So Thailand will be at least 20% higher than last year. In the volume and top line basis. So overall 30 to 35% growth in the top line, and we are confident of achieving the same margin levels this year also.
Okay, all right. So you seem quite positive. But I just wanted to get a sense in terms of what kind of commentary you're working with when it comes to your clients, because you have some of the best clients in terms of, long-term and strategic clients in your portfolio. MRF, Apollo, Seat, GK Tires, just to name a few. Are you seeing any sort of contraction or hesitancy on their front in terms of manufacturing, at least in the interim? And how is it as compared to, say, the first wave we saw last year?
Yeah, first wave was like almost lockdown. All the manufacturing was also shut. So whatever demand was there, they could not run the factories. So the demand had come to zero in the month of April and May last year. But this year, the factories are allowed to run during the COVID. But of course, all the markets are closed, dealerships are closed. There is lesser movement of goods and vehicles on the road. So tire consumption must have reduced, and which has we are seeing that one or the other factory of a company, a tire company, is under shutdown for some or the other reason. And we also learned that there is a stock pile up at tire companies, so they are also reducing production. And now we are all waiting for unlocking of the the country when the demand is going to come back. So May and June are going to be affected in terms of sales and production up to 20-25% max. And then the expectation from tire industry, what we talk to our customers, that July onwards it is looking all right. They are optimistic about July onwards.
All right. I'm just trying to put all those numbers into perspective. What you're guiding to us is that revenue growth of close to around 30-35% odd. In terms of a volume outlook, I've just added the number that you gave us for Thailand as well as India. You're looking at around 90,000 tons, and margins you're looking to maintain at around this 17-18% band. That's the broad guidance that you're giving us. Tell us about market share, because a couple of the players in India, they didn't have the financial ability to battle the past couple of years, and because of that, your market share has gone up. So what is your updated market share here in India? And also, if you could tell us in Thailand, your presentation suggests that you're looking at increasing your market share from around 20% to 30%. By when?
Nigel, we are the only company doing bead wire in Thailand. Okay, and there are challenges in logistics globally. So local tire companies in Thailand are keen to buy more from us. So our market share last year was 20%, which we are targeting a 30% market share, and which is happening on a monthly basis also. And it is because people are looking at an alternate to Chinese bead wire, and they are keen to develop a second source, and Rajratan is the obvious choice in Thailand and the Asian countries. Talking about India, yes, we have a market share close to 50%, and we are looking at the growth of tire industry in coming years. And we have already, we have expanded the capacity in India. We are also exploring possibilities of putting up a new greenfield project in Chennai to cater to the growing demand of tire industry for bead wire.
Okay. Final question then, it's looking all good as of now, Mr. Chordia, but your capacity expansion is you're going to go from around 110,000 approximately to around 170, 180,000 odd. So you require money. How much money will this capacity expansion come to, the total capex that you have laid out? And if you could tell us, by when do you hit this mark of the increased capacity expansion? FY24, is it?
Yeah, so currently in this year, we are expanding capacity in Thailand from 35,000 tons to 60,000 tons, which will be complete by end of this year and will be up and running for next year. And then parallelly, we are exploring possibility of putting up a plant in South India closer to customers, and that will be a port-based plant. So we also look forward to export market from that port-based plant. and that will take about an investment estimations are about 250 crore, and we are also looking at that investment coming in 3 years time. Because it takes time to gear up a big production capacity. And 250 crores, if you look at our cash flows, we have a robust cash flow of, from EBITDA, which is sufficient for this investment plan in 3 years. If there is some shortfall, we'll raise some loans, term loans, which are at a competitive rate from the commercial banks. So not a major hit on the balance sheet.
Okay, so before we wind up this conversation, just wanted to understand what exactly is your balance sheet right now. You said free cash flow is strong. How much are you looking to generate in FY22? If you could just leave us with that.
Yeah, we are looking at 130, 140 crores of EBITDA in this current year on a consolidated basis, and growing forward, continue to maintain that or growing from there, and which is sufficient to invest for a new greenfield project. If there is a shortfall, we can always borrow at a very competitive price from commercial banks in India and Thailand. Our borrowing cost in India is 7%, and Thailand is below 5%.
Okay, got it. All right, competitive rates in terms of borrowing as well, and around 130 to 140 odd crores is what they could generate in terms of free cash flow in FY22. Thanks very much for joining in, Mr. Sunil, and talking to us about the company and their Q4 earnings. Well, let's move on then. M&M is in focus after the company presented a conservative guidance for the tractor business. Earlier today, we spoke with Hemant Sikka, the president of the farm equipment sector at the company, and he sees green shoots visible and remains optimistic on the business picking up in June. Listen in.
Way it was going up, I think it is going down at the same pace, which is a very good news for us. And we are seeing that play out in last about 8 to 10 days. Very early trends, but actually most of the players, including Mahindra and Swaraj, both brands for us, actually had a very good close to the month of May. People have money. As they are seeing that the COVID wave is going down, vaccination is kind of progressing, catching pace, most likely in the month of June, the confidence with the farmers is coming back. And now they are going ahead and buying the purchase that they wanted to do. Regarding the industry, overall, industry has given a guidance, including us, that we are looking at a low single-digit growth for this year. Overall, at an average, about 60% of our dealerships were closed. And even in the dealerships that were open in the 2 weeks of April and 2 weeks of May, for these 4 weeks, the walk-ins had almost gone down to a trickle. No, inventory is very, very comfortable. In fact, to be honest, I would have preferred a little bit more inventory with me at this stage going into a season. The inventory position is better than what it was in the beginning of June last year, because last year was 6-week total lockdown, not even a single tractor could roll out in the plant. This time we have been able to run our plants at around 60% of our capacity, even during the lockdown. So we lost about 30-40% of the production because of supply chain issues. Because as you know, Bangalore is currently under severe lockdown, and some of the key suppliers are coming out of Bangalore. Bosch is there. There are some other very, very important suppliers from there.
Well, on that note, though, we'll slip into a short break. The markets are down close to around 70 points odd, but we'll find out what's the trade on Prakash Gaba's mind, as well as a couple of trading strategies. You stay with us.